Let's talk about growth.
Sure.
You had a blog post out in the weekend,
Yeah.
almost telling us that the growth target is going to be lowered. What was the previous one? 4 to 5%?
4 to 5% when we
Okay.
last updated it, but we realized that the recovery, although being sustained, but slower than expected. So, but anyhow, it would still be a GDP growth of over 3%.
Okay. Over 3%. That's
Over
as much-
3%.
Because that comes out in a few days, right?
Yes.
The final figure. And I don't suppose you can give it to us now, no?
Sorry.
No, that's a secret. Okay. At least 3%. What didn't happen? What went wrong? Why do you think the recovery was so weak?
Well, number one, export. The three engines of our economic growth is export, capital formation, and private consumption. Export, originally we expect it to come back,
Okay.
but it's still to decline, still continue to decline, although at a slower pace. And then when it comes to private consumption, tourist arrival, good, but overall consumption is still slower than expected.
What's the outlook then for all three? Like which of the three do you have the highest degree of certainty or confidence recovers next year?
Well, now is in November. I think we are pretty confident that we will have a GDP growth of exceeding 3%.
Okay.
Yeah.
How much of the problem is just higher rates globally, higher interest rates?
Higher interest rate also has an impact on the asset market.
Right.
Yeah, when you look at the stock market here in the mainland, as well as the property market, they are comparatively still quite weak. So that also explains the spending sentiment at the moment.
The government has laid out several steps in the last policy address to help trading turnover, for example, in the market, and also some of the transactions in the housing market, for example, right? I guess the question is the government prepared to do more in the event the weakness persists longer than you would expect?
We do think that what we have done is basically sufficient.
Okay.
It depends on the economic situation and a number of external factors. At the moment, we are carefully monitoring the situation. We are still confident that things will stabilize.
Okay, well, one of the things that keeps coming up is, in the housing market, do you think is there an oversupply situation in the housing market in Hong Kong? Could that be one of the reasons?
Well, the demand-supply situation compared to, say, a decade ago,
right,
when compared to over a decade ago when the demand-side measures was introduced, it's very different. At the moment, supply is coming, but I don't think there is an oversupply situation. Property price at the moment, because of the economic situation and also the investment sentiment, it has been coming down slowly, but orderly.
Right.
When you look at the volume, also substantially reduced.
Right.
Meaning that there is no confidence crisis. People are not rushing to offload their property, nor does any developer wish to offload their property regardless of price.
I mean, the market was concerned a few weeks back since you mentioned developers. Are you concerned about the leverage that some of the private developers in Hong Kong? The bond markets, some of the bond prices dropped in the market, as you know, for example.
Comparatively speaking, still the leverage ratio of our developers in general are still healthy.
Okay. Now, just looking, and I don't want to force a headline out of you, of course, in terms of worst case scenarios, but what would be the other options on the table in the event the weakness persists, for example? Like, was reducing the stamp duty from 7% lower to maybe for resident first-time buyers, was that on the table at all? Or is that a nuclear option?
Yeah, we do not think it is needed.
Okay. Yeah. Let's talk about borrowing. What is the deficit target of the government for the full year this year? You talked about growth. What's the deficit target?
This year, because of the asset market weakness, the stamp duty to be collected from the property side and the stock side would be much lower than expected. Also, land premium also substantially reduced. So we expect this year's financial deficit would be about slightly over 100 billion.
Okay, and you're not worried that doesn't concern you at all?
Well, what we have to manage is a balanced budget over an economic cycle.
Right.
So single year ups and downs, we do not worry too much. At the end of the day, Hong Kong still has a very substantial fiscal reserve to sustain us during tough times.
Do you think things get better next year on the budget deficit?
Well, depending on the economy and the asset market, we remain optimistic because in this term of government, we have rolled out a number of strategies to attract more businesses to come, to attract more talents to come. Say, for example, in terms of talent, we have received over 180,000 applications and we have approved over 100,000 of them. Already 70,000 of them are already here. And these are my new taxpayers. And in terms of attracting strategic business, we have 30 such companies coming here. They are going to employ altogether in the next few years 10,000 people, mainly managerial and research jobs. And the collective investment they would put in the initial years would be over 30 billion Hong Kong dollars. And these are also my taxpayers, so we are optimistic. As long as we continue to do the right thing, attract business, attract talents to come, play the card right in terms of connectivity between the mainland and the international world, we will be able to weather through short-term difficulties.
One of the other themes that's come up, and I was speaking with Eddie earlier on, Eddie Yu, I also, Gucho Aguzin, of course, out of HKX, this deliberate push to engage with the Middle East, that's been very much in the headlines and news this year so far. What is Hong Kong expecting as far as the tangible fruits of that exercise, and when do we see that come?
Yeah, we want to diversify in terms of issuers on our stock exchange, in terms of capital. So apart from mainland capital, international capital is important. In my last trip to the Middle East in October last year, I saw substantial interest for them to diversify as well. But their understanding of this part of the world is comparatively limited. So over the past years, a lot of delegations, mutual delegations, and I understand that there would be an ETF from Hong Kong investing into Saudi Arabia, and vice versa, there will be capital coming. So we are optimistic that there would be more quality companies coming to this part of the world to list and to capture the mainland market opportunities.
Well, I'll give you one name as a final question. Aramco. Does Bloomberg get to write Aramco lists in Hong Kong in 2024? What's the answer to that question?
Well, it is a great company. We are targeting many companies in the Middle East. Quality of the companies are important. So we open all of them by open arms.